Madam.
Good morning, dear students. First, I thank TREI Society to teach you all. In last class, we have learned that methods of providing depreciation. There are 10 methods are there, but in Board of Intermediate, we have 2 methods. One is straight line method and other one is diminishing balance method. Okay, in straight line method, we are providing depreciation equal installments. Equal installment, it is also called as equal installment method or original cost method or fixed installment method or straight line method. Because we are providing the depreciation rate of depreciation same amount. Every year we are charging same amount. Okay, I took first straight line method. In straight line method, from Telugu Academy book, inter second year accountancy, I have taken my first problem. Okay, straight line method. Okay, depreciation we have to provide. Okay, annual straight line method. Straight line method, it is also called as fixed installment method or original cost method. Here in first problem, Sri Sai and Co. purchased a machine for 2,50,000 on 1st April 2009. Okay, they have purchased one machine. Here they have not mentioned that name. Okay, we will assume as from X company. From X company, they have purchased one asset, that is machine, for 2,50,000 on 1st April 2009. Estimated life of the machine is 10 years. Okay, life cost is 2,50,000 and estimated life of the machine is 10,000. Estimated life, we can expect the asset value. Asset, how many years it will work, we can expect that asset value. Okay, the lifetime of that asset is 10 years. And the scrap value at the end of its life is 50,000. Scrap value 50,000. Scrap value is also, it is called as scrap value. We will estimate this scrap value. Scrap value is nothing but the value that we lost in remaining years. The estimated life of years, the asset value, we will lose this amount of scrap value. We can expect this approximate scrap value. We cannot measure exact value of scrap value. Okay, scrap value is 50,000. Calculate the annual depreciation and rate of depreciation, assuming that the accounts are closed on 31st March every year. The accounting there are two ways we will consider the accounting year. Calendar year and financial year. Calendar year, when will it start? Calendar year will be started January to December 31st. Okay. January to December 31st. That financial year will be started from April 1st to March 31st. Here the asset was purchased on 1st April. So here we are assuming that financial year is from April 1st to 31st March. They have also asked us to prepare machine account for 3 years. For 3 financial years, we have to find out the depreciation. For that, we have to prepare machine account also. One is annual depreciation. They ask you to find out annual depreciation and rate of depreciation. And third one is machine account for 3 years. For the financial year is 1st April 2009 to 31st 3 2010. That is the first year. And second year 1st April 2010 to 31st 3 2011. And next third year 1st April 2010 11 to 2011 to 2012. Okay, 2003 years they asked to prepare machine account. Okay, 3 years. Okay, here we are doing straight line method. As per the straight line method, solution. For first question, it is taken from Telugu Academy Commerce textbook, second year. Okay, first problem. Annual depreciation. Annual depreciation is equal to cost of the asset minus scrap value divided by estimated life of the asset. Okay, this is the formula to find out the annual depreciation according to straight line method. Okay, cost. What is the cost of the machine? Cost of the machine is 2,50,000. 2,50,000 minus scrap value. Scrap value they have given 50,000 divided by estimated life. Estimated life is 10 years. Okay, 10 years. We will substitute the amounts into formula. Cost 2,50,000 minus scrap value 50,000 divided by 10 estimated life. Okay, we will get 20,000 as annual depreciation. 2,50,000 minus 50,000 is equal to 2 lakhs. 2 lakhs divided by 10, it will give 20,000. Okay, 20,000 is the annual depreciation, amount of depreciation. Every year, for 3 years, we are charging the depreciation because this is a straight line method. In straight line method, we are charging depreciation every year, same amount. For that 3 years, we are providing 20,000 every year. Okay, rate of depreciation. Rate of depreciation, they also asked us to find out an rate of depreciation. One formula is there, annual depreciation divided by cost into 100. What we already find out this 20,000 is the annual depreciation. We will substitute in the formula. Okay, annual depreciation is equal to 20,000. 20,000 divided by cost. What is the cost of the asset? 2,50,000 divided by 2,50,000 into 100. Into 100, why we are 100 here, we kept 100 because we have to find out the percentage rate. Rate means percentage of depreciation. For every year, how much we are providing depreciation, that rate we have to mention. Okay, into 100. 20,000 divided by 2,50,000 into 100. Okay. Eight percent is the rate of depreciation. Rate of depreciation, how much it is? 8%. 8% every year we are charging depreciation on asset, on machine. Okay. Third one is we have to find out machine account for 3 years. 3 years means first 1/4/2009 to 31/3/2010, and next 1/4/2010 to 31/3/2011, and last third year 1/4/2011 to 31/3/2012. Okay, this is annual depreciation. This is rate of depreciation. Annual depreciation is 20,000. With this 20,000, we are substituting in the formula. We can get 8% of rate of depreciation. Okay. Next, third one is we have to prepare machine account. Machine account. Straight line method. Machine account. Third one is machine account. We have to prepare. Okay. Here we have date column and particulars, amount, date, particulars, amount, like that. Amount, date, particulars. Okay, date, particulars, amount, rupees, date. We will make this two sides. Okay, one half of this side, debit side, we will consider this as the credit side. Okay, debit side. Debit, we will denote that DR. DR means debit. CR means credit. Okay, debit side and credit side. Credit side what? Date, particulars, amount, rupees. Okay, this is the first problem in your textbook. Okay, date, particulars, amount, date, particulars, amount. Okay, what we in the question, what they given is machine cost is 2,50,000. They have purchased from X on cash basis only. Okay, on cash basis only. We will consider that they have given the check. Check means to bank account. The entry will be, what is the entry for this machine account? Data to bank account. First entry, journal entry. Machine account data to bank account. Okay, machine account is the real account. Okay, real account, what comes in, debit what comes in, as per real account rule, debit what comes in, credit what goes out. Okay, as per the nominal account. Debit means machine is coming into the organization. Okay, it is coming into business. This machine is coming into the business. Okay, what is going from the business? Cash is going from the business. So credit bank account. Okay, machine account data to bank account. Okay, what is the date? On 1st April 2009, they have purchased machine for 2,50,000. 1/4/2009. Okay, to bank. To bank account. Amount 2,50,000. Okay, for every year we are calculating the depreciation. Okay, at end of the starting of the year it's 1/4/2009. End of the year 31st March 2010. Okay, 31st March 2010. 10. This is the financial year. by depreciation. Okay, here place is not sufficient. So I wrote here shortcut depreciation. In your exam, you have to write full. Okay, depreciation. How much depreciation? We already find out that depreciation amount is 20,000. We have substituted that amounts into formula. So we got depreciation, annual depreciation is 20,000. Okay, here 2,50,000 and we have to balance the amount. Okay, same date by balance carried down. Balance carried down. How much balance carried down? 2,50,000 minus 20,000. Okay, 2,30,000. Amounts should be tallied. 2,50,000. Here 2,50,000. Here debit side is more. So 2,50,000. 2,50,000. This is the balance carried on. At the end of the year, the remaining balance is 2,30,000. 31st 3 2010. Okay, here we have to take example today 31st 3 2010. We have to take tomorrow's date 1/4/2010. Okay, financial year 1/4/2010 to 1/4/2010 to 31/3/2011. 2. This balance carried down becomes last year balance carried down becomes for next year balance brought down. This amount will be carried forward to next year. Balance brought down amount 2,30,000. Okay, 2,30,000. Next, end of the year, we have to provide depreciation 31/3/2011. Okay, by depreciation. Okay, depreciation. By depreciation, how much amount? 20,000. For every year, we are providing depreciation as per straight line method. So, as per straight line method, every year the amount of depreciation will be same, 20,000. Next, we have to balance. That same date, 31/3/2011 by balance carried down. Balance carried down 20,000. 2,30,000 minus 20,000. 2,10,000. Okay. Debit side is more. Okay. 2,30,000. 2,30,000. 2,30,000. 2,30,000. Next year, next financial year will be 1/4/2011. Okay, to balance brought down. This to by balance carried down this year becomes for next year balance brought down. What is the amount? This balancing amount 2,10,000. Okay. 31/3/2012. Okay, 31/3/2012 by depreciation how much amount? 20,000 for every year, same amount. They ask you to prepare machine account for 3 years. Okay, this is the third year. Okay, for this one more entry, the second entry, depreciation account to machine account. Data to machine account. This is the entry for providing depreciation. Okay, as per nominal account. Nominal account, debit all losses and expenditure, and credit all incomes and gains. Okay, depreciation is the loss. Okay, depreciation. So we debited, machine account should be credited. Okay, by balance, same date, by balance carried down. Okay, how much? 1,90,000. 1,90,000. Okay, from where we are getting this amount? 2,10,000. Here it is more. So 2,10,000. Deduct this depreciation, we will get 1,90,000. Here 2,10,000. For how many years they ask you to prepare? 3 years. Okay, 3 years completed. This balancing figure will becomes next year balance brought down. This next day, 31/3/2012, next day is the 1/4/2012. Okay, to balance brought down. How much? 1,90,000. Okay, completed. Here we no need to write depreciation because they asked us to prepare only for 3 years. 3 years completed. Okay, in the form this amount will be carried forward for the next year. Machine account. Okay, this is the machine account. We have prepared for 3 years. Okay. Here what we have prepared here, one machine account. Okay, they asked to find out annual depreciation and rate of depreciation and machine account. Okay, annual depreciation is the formula is, what is the formula? Okay, cost minus scrap value divided by estimated life. Okay, annual depreciation is equal to cost minus scrap value divided by estimated life of the asset. Okay, what is the cost? 2,50,000. Scrap value is 50,000 and estimated life is 10 years. Cost 2,50,000. Okay, annual depreciation is equal to 2,50,000 minus 50,000 divided by 10. Okay, we will get 20,000 as the annual depreciation. As per straight line method, we are providing depreciation same for every year, same depreciation 20,000, 20,000, 20,000 for 3 years. Next, they ask you to find out the rate of depreciation. Rate of depreciation, how we have find means rate of depreciation. One formula is there. Okay, annual depreciation divided by cost into 100. Okay, rate of depreciation is equal to annual depreciation. Annual depreciation is 20,000. 20,000 divided by cost. What is the cost? 2,50,000. 20,000 divided by 2,50,000 into 100. We will get 8% rate of depreciation is 8%. Okay. Next, third one is machine account. Machine account. Machine account, they ask you to prepare for 3 years. Okay, machine account, we already prepared this machine account for 3 years. The machine was purchased on 1/4/2009 to bank account by issuing a check. Okay, we assuming that they issued a check, bank account 2,50,000. This is the cost of the asset. Okay, on this cost, we find out the depreciation. Depreciation amount is annual depreciation is 20,000. Okay, balancing this balance carried down will be next year balance brought down. It becomes next year balance brought down 2,30,000. Okay. Next year, what is the depreciation? Same amount, 20,000. 20,000 balance amount is 2,10,000. This will become next year opening balance. Okay, balance brought down 2,10,000. Okay, depreciation amount is 20,000. For third year also 20,000. Okay, by balance carried down 1,90,000. Remaining amount will be transferred to next year. This is the balance brought down 1,90,000. Okay, 1,90,000. This is entries. Machine account. Machine account. Journal entries. We can know that journal entries. Machine account debtor to bank account. Machine account machine account as per nominal. This machine account is the real account. Okay, as per real account, debit what comes in, credit what goes out. Okay, machine is coming into the business. Machine we have to debit. Okay, machine account debtor. What is going out of the business? Cash is going out of the business. So to bank account. Machine account debtor to bank account. This is the entry, journal entry for the first transaction. Okay, second transaction is the depreciation. Depreciation we are providing as per the nominal account, debit losses and the expenses, credit incomes and gains. Okay, depreciation we have to debit. Okay, depreciation account debtor to machine account. To machine account. Okay, these are the two journal entries. We have completed this machine account. This balance will be carried forward to the next year. Okay, they asked for preparing 3 years. We are completed for 3 years. Okay, 3 years. Okay. Okay. This is the machine account we have prepared. Okay, as per the straight line method. Thank you.